Hello, this is Rick Komarek, Certified Financial Planner, and today we have the third quarter for 2018 market review. Can you believe it? 3/4 of the year gone already, and you know what that means? We're in the fourth quarter, which means we're almost done with the year. Well, with that, let's go ahead and get started and see how the third quarter of 2018 has gone, and we'll start with the market summary. First and foremost, here is the U.S. stock market. Wow, the U.S. stock market did very well in the third quarter, returning 7.12%. Contrast that with the average quarterly return of 2%, and you can see that this last quarter was a very good quarter for U.S. stocks. International developed stocks, they didn't do quite as well at 1.31%, but they were still positive. That's a good thing, of course. And then the emerging markets and global real estate both down for the third quarter. U.S. bonds were up just barely in the third quarter, and then the global bond market was down a bit in the third quarter. If we look at some of the headlines here over the third quarter, you can see that there's, interesting things like the U.S. factory sector clocks strongest growth in 14 years, or youth unemployment hits a 52-year low. So lots of different interesting things going on here in the third quarter. And of course, that means that as the news comes out, the prices in the market fluctuate in the short term. However, in the long term, of course, it's the fundamentals that are the drivers of the market returns. Select country performance. I like to use this chart to pretend like if the market were the Olympics, who would get gold, silver, and bronze? And it turns out this quarter, Israel got gold, U.S. second place, and then Sweden for the bronze. And you can see that Israel was the top performer, U.S. and then Sweden. And then down here, lagging behind is Ireland, Belgium, and Italy. Again, the interesting thing behind these returns is that they tend to shift every quarter, and we never really know which country will produce the greatest returns in any one given quarter until after the quarter's over. All right, here we go now transitioning into the fixed income for the third quarter. Interest rates increased in the U.S. during the third quarter. The yield on the 5-year Treasury note rose 21 basis points, and the yield on the 10-year Treasury increased 20 basis points to 3.05. So still relatively low interest rate environment. However, it's the highest that it's been in quite a few years now because we've been in this low interest rate environment for quite some time. Finally, I always like to conclude with the message of diversification. Again, this is just one quarter, just 1/4 of the year. We never know exactly how the entire year will go or how the next 5, 10, 15, or 20 years will go. And remember, like Warren Buffett said, if you're going to be invested in the market, view it as a lifetime investment. All right, finally, we're here and to see that different mixes of stocks and bonds. Typically 100% stocks outperforms those that have a mixture of bonds in them. However, that is largely due to the fact that you are capturing a greater amount of risk as well. So that return is not without risk. So let us never forget that point. All right, with that, if you have any questions about the market, the economy, or your investments, financial planning, retirement, taxes, insurance, that's what I'm here for. Rick Komarek, Certified Financial Planner.